Okay, let's start by painting a picture. Imagine you're stepping into Kerala, that lush, green, southwestern tip of India. The air is thick, smells like spice, maybe coconut. Life there really moves with the monsoon rhythm. And tucked away in almost every family's safe. Whether you're in a city like Kochi or a small village by the backwaters, there's gold.
Right, and we're not talking about delicate little things. Often it's substantial stuff, heavy chains, solid bangles, and these really important gold coins called
Yeah,
sovereigns.
sovereigns. We'll
Yeah.
come back to those. But this gold, it's generational wealth.
Exactly. Passed down, it signifies prosperity, sure, but it's much more functional than that. It's really the ultimate financial backstop.
Like when the roof suddenly starts leaking, or
Absolutely.
a college fee pops up out of nowhere.
Precisely, or a medical bill. That gold turns into instant cash. It provides immediate liquidity when you really need it.
And that brings us to a really startling core of our deep dive today. These non-banking financial companies, NBFCs, operating right there in Kerala, they're holding on to a collective stash of gold pledged by ordinary families that's actually larger than the official gold reserves of some major global economies.
It's an incredible statistic, isn't it? It really speaks volumes about how finance works on the ground there, decentralized.
So what's the number? How much are we talking?
Okay, get this. As of November 2025, if you add up the gold held as collateral by just the major local lenders in Kerala, it comes to 381 tons, pure gold.
381 tons. Wow. Okay, put that in perspective for us.
Right, we'll compare it to national reserves. The UK's Bank of England holds about 310 tons. Spain, around 282 tons.
So this regional collection of pledged family gold outweighs the entire sovereign reserves of the UK and Spain.
That's right. And remember, this isn't wealth from taxes or government trading. This is the combined value of household assets temporarily pledged.
It's an astonishing financial fortress built on, family jewelry.
Yeah, it's privately held, it's decentralized, but it carries immense financial weight on a global scale. So our mission today is really to unpack this. How does this gold loan system actually work? Who are these companies, these golden guardians? And maybe most importantly, what does this massive, resilient stash of gold tell us about economic life, especially when traditional banks don't quite meet the need?
Okay, let's break down the mechanics then. Because the beauty of the gold loan seems to be its simplicity and its speed.
It really is. It's basically the opposite of a typical bank loan experience.
So you need cash fast. You walk into one of these NBFC branches.
Yep. You hand over your gold jewelry, a bangle, a chain, whatever. They appraise it right there very quickly. And you got the cash, often like within minutes or maybe an hour.
Wow, minute.
Then you just repay the loan plus interest over an agreed period, and you get your gold back, your family heirloom.
And compared to trying to get, say, an unsecured loan from a bank.
Oh, it's night and day. No mountains of paperwork, no deep dive into your credit history that takes forever. The hassle factor is just gone.
The trust is essentially in the metal itself. That's the security.
Exactly. The gold provides instant, undeniable collateral, and that's reinforced by the culture, as you said earlier.
Right. In Kerala, gold isn't just an asset. It's got huge emotional and social weight.
Absolutely. It's a sign of prosperity. It's tied to family history. It's a critical safety net. People are highly motivated to get that gold back. So when the loan is secured against something so significant, the risk for the lender is actually much lower than, say, lending on just a promise to repay.
Okay, let's talk value. You mentioned sovereigns earlier. What exactly is a sovereign in this context? It seems key.
Ah, yes. Crucial point. In India, a sovereign typically means an 8-gram gold coin, usually 22 carats, like the standard unit, easily recognizable for storing wealth in gold.
And what's that worth now? Gold prices have been high.
They have. Based on recent prices, say around Rs 12,202 per gram, a single 8-gram sovereign is worth about Rs 81,000.
Okay, 81,000 rupees for one little coin. Now multiply that kind of value across 381 tons. The total value must be astronomical.
Yeah, it is. You're looking at over Rs 4.6 lakh.
A lakh crore. Okay, for our international listeners, a lakh is 100,000 and a crore is 10 million. So a lakh crore is 1 trillion rupees, 4.6 trillion rupees.
That's the scale. In US dollars, that's roughly $55.5 billion. Just from pledged gold in one Indian state.
$55 billion.
Yes.
That's comparable to the GDP of a decent-sized country.
It is. It's a massive amount of liquid wealth generated entirely from household possessions circulating within this regional financial system.
Incredible. So who are the main players managing all this? Who are these golden guardians sitting on this treasure, mostly based out of Kochi?
Well, they're large professional operations, highly regulated NBFCs. There are quite a few. But four big names really dominate the organized market in Kerala. You've got Muthoot Finance, they're the largest, the real titan here. Then there's a state-backed entity, Kerala State Financial Enterprises, or KSFE, very significant player. And then you have Manappuram Finance and Muthoot FinCorp also holding substantial amounts. These companies have really nailed the logistics, the security. Managing hundreds of tons of gold is no small feat.
So let's do that comparison again. If you took just these Kerala-based operations of these major firms, treated them like a single entity, a single nation, where would they rank globally in terms of gold reserves?
Okay, if you bundle their 381 tons together, they'd rank 16th, right between Portugal and Taiwan in the global list of official gold holders.
16th worldwide, just from private companies in one state holding pledged jewelry.
Yeah, they're holding more gold than the central banks of countries like Brazil, Australia, South Africa, major economies.
It really makes you rethink where financial power actually sits, doesn't it? Sometimes it's not in the central banks, but spread out among the people.
Precisely. Decentralized household savings acting as a massive financial buffer.
And this whole system, this boom, it's getting a boost from market conditions too, right? Gold prices have been soaring.
Absolutely. That's like pouring rocket fuel on the fire. Gold prices have been climbing, touching near Rs 1.11 lakh per 10 grams recently. A lot of that is driven by global uncertainty. Trade tensions, political instability elsewhere, election jitters. Gold is the classic safe haven.
So when the price goes up,
Your old family necklace suddenly becomes much more valuable as collateral. You can borrow more rupees against each gram of gold you pledge. This increases the leverage available to household, making gold loans an even more attractive option for quick funds.
which brings us to the why now question. We know the system, we know the players, we know the scale. But what specific pressures are pushing so many people, especially in smaller towns, tier 3, tier 4 cities, to unlock this gold right now?
Well, a big immediate factor is a credit crunch, and it's partly regulatory driven. The Reserve Bank of India, the RBI, has tightened the screws recently.
How so?
They've cracked down quite hard on unsecured lending loans without collateral, and particularly on the practice of just rolling over those loans indefinitely without paying down the principal.
Ah, okay. Trying to reduce systemic risk from bad debts, presumably.
Exactly. Necessary for overall financial stability, no doubt. But the side effect for ordinary people, banks got much more cautious. Getting a quick, unsecured loan became harder, especially for smaller needs, or if your credit history wasn't perfect.
So the traditional tap got turned down a bit.
Right. And when that formal, unsecured credit becomes less available or slower to access, gold steps right into the breach. It's fast, it's flexible, it doesn't require that perfect credit score. The gold itself is the guarantee.
Makes sense. It fills the gap.
We heard this directly from industry folks. Umesh Mohanan, who heads up Indel Money, pointed out that in these smaller towns, gold loans are often the first choice for immediate needs. Things like, funding your son or daughter through college for a semester, maybe paying for urgent house repairs like getting the house painted, or even buying tools for a small home-based business.
So not frivolous spending. These are core life needs, livelihood needs.
Absolutely. These are needs that keep life moving forward. And the rising gold price, as we said, just makes it easier. Higher value means more borrowing power per gram. This is especially beneficial for lower-income families who might be completely shut out of the formal banking system otherwise. They have the gold, and suddenly it gives them more financial power.
But does this create a risk? With prices high, are people getting tempted to borrow too much? Is there a danger of speculation, people taking out loans, hoping gold prices keep rising, and then getting trapped?
That's a really important question. You'd think maybe, right? High prices, easy leverage. It sounds like a recipe for trouble.
Yeah.
But the data and what the leaders of these NBFCs observe suggests something quite different. It seems most borrowers are actually very prudent.
Prudent, how so?
Well, Shaji Varghese, the CEO of Muthoot FinCorp, made this point quite clearly. He sees borrowers treating these loans like a short sprint, not a marathon gamble on the gold price. They're borrowing for a specific temporary need. They have a plan to repay.
A short sprint. I like that analogy. So even if the loan term on paper is, say, 12 months?
Right. The actual repayment behavior is much quicker. Their data shows something like 9 out of 10 customers redeem their gold, pay off the loan, and get their jewelry back within just 5 or 6 months.
5 or 6 months. That's fast. That doesn't sound like people struggling or speculating long term.
Exactly. And the hard proof is in the auction rates.
The auction rate, that's when the borrower defaults and the NBFC has to sell the gold to recover the loan amount?
Precisely. It's the ultimate measure of distress in this market. And those auction rates have actually dropped significantly. They've fallen from around 2.5% down to nearly 1%.
Wow, only 1% default. That's incredibly low for any kind of lending, isn't it?
It's remarkably low. It really reinforces the idea that people are borrowing for genuine needs they expect to resolve quickly. They are highly disciplined about getting their family wealth back. It challenges that common perception, maybe more prevalent in the West, of this kind of borrowing being purely desperate or predatory.
Hmm.
Here, it seems much more pragmatic.
That cultural factor, again perhaps, the deep significance of the gold, and the importance of repaying debts.
Absolutely. That cultural reverence, combined with the emotional value of the collateral, really stabilizes the market. People are borrowing smart, not just gambling.
Okay, let's zoom out a bit from Kerala. This isn't just a Kerala phenomenon, right?
Yeah.
Gold-backed lending is huge across India.
Oh, massive. Nationally, estimates suggest there are somewhere between 2,950 and 3,350 tons of gold pledged against loans across the entire country.
Almost 3,000 tons or more. That's an enormous pool of collateralized value.
It is, but there's a really crucial split here that policymakers have to grapple with.
What's the split?
Only about 37% of that huge national gold loan market operates through the organized, regulated sector, the NBFCs like Muthoot or Manappuram, and the banks.
Only 37%, so the majority. Nearly two-thirds.
Exactly. A hefty 63% lives entirely in the shadows. It's happening through thousands of unregulated local pawn shops and individual moneylenders.
Ah, the unorganized sector. And the concern there is
Predatory practices. Those shadow lenders often operate outside any regulatory framework. They can charge sky-high interest rates, use unfair terms. It can be really exploitative.
right, which brings us back to that RBI clampdown and the policy balance.
Yes. This is the warning that came from Umesh Mohanan at Indel Money again. If regulators push too hard on the organized 37%, the ones playing by the rules, offering transparency and fair rates.
You risk pushing people away from the safer option.
Precisely. You don't eliminate the need for quick cash. You just funnel potentially vulnerable families towards that unregulated 63% into the arms of local moneylenders who might charge, as he put it, one-day gouge rates.
Gouge rates.
Yeah.
And people could lose irreplaceable family heirlooms under much worse terms.
That's the danger. It highlights how these large regulated NBFCs actually perform a vital function. They provide fair, accessible finance that keeps millions out of the clutches of loan sharks. So finding the right regulatory balance is absolutely essential. You need oversight, but you don't want to inadvertently strengthen the shadow market.
Okay, so let's try and synthesize this. We've gone on quite a journey. From a single gold sovereign, a family heirloom tucked in a drawer in Kerala,
Yeah.
to this collective financial powerhouse, a regional system holding more gold than major industrialized nations.
Yeah.
It's really a story about local ingenuity, isn't it? Financial resilience from the ground up.
It really is. That 381-ton hoard in Kerala isn't just a number. It's like the pulse of the everyday economy in southern India. It shows how a deep cultural connection to an asset like gold can naturally evolve into a really smart, accessible financial tool for millions, especially when the more formal banking channels are maybe too slow, too complex, or just unavailable.
It definitely makes you think differently about what financial stability means and where it comes from. And it leaves you with a fascinating thought, doesn't it? If this decentralized wealth held by ordinary citizens keeps growing and wielding this kind of collective financial weight, how might global finance, the big institutions, the central banks, need to adapt? Who knew that a simple family sovereign could hold so much quiet power over a regional, even a national economy?
Yeah, it forces us to see that resilience often isn't just about top-down control. It's also about the practical, disciplined actions of millions of individuals managing their own lives, securing their own futures. That's maybe the real treasure hidden in that 381 tons.